In this video, I'm going to show you 6 reasons why offset accounts are a complete stitch up for first home buyers. In fact, following these steps saved one of my customers $60,000. And by watching until the very end, I'll show you how you too can avoid this stitch up. So keep watching. 1. The Marshmallow Test. A simple test conducted at Stanford University in 1970 involving hundreds of children, each left alone in a room with a delicate delight. Before they were left in solitude, they were offered a choice. They could either have one right away, or they could have 2 if they just waited. Could they resist the sweet temptation for an agonizing 15 minutes, or surrender to instant gratification? And before I tell you, remember to hit that like and subscribe button. This is the first problem with an offset account. It's because if you use an offset account correctly, both your income and expenses go into the same account. And it makes managing your money near impossible. And is a reason that Scott Pape, the barefoot investor, recommends avoiding an offset account at all costs. So will you pass the marshmallow test? Answer yes or no to the following questions. Are you an excellent budgeter? Do you prefer to save money over spending it? Do you find it easy to sacrifice for future goals? If you answered yes to all 3 questions, well, an offset account still might be for you. And remember to stick around because I'm going to show you how you can use one of our calculators to see whether or not an offset account is for you. 2. The hidden cost. As a first home buyer, you might be shocked to find that the banks will force you to take a credit card with their package. These are the home loans that offer an offset account. On average, banks make about $1,900 in interest for every credit card in Australia, and ultimately comes at a hidden cost in applying for an offset account. The next hidden fee is your loyalty. With the home loan package, banks typically charge a $395 package fee. This is where the banks give you a credit card, an offset account, insurance, and all the products under the sun. What they're essentially trying to do is transition you to what's called an MFI customer. That's bank lingo for main financial institution customer. Think of MFI like Amazon Prime. Paying that fee creates a sunk cost, and it means essentially you'll try to get your money's worth. In the United States, it translates to Amazon Prime customers spending more than double their non-Prime counterparts. It allows Amazon to make more money as people's propensity to shop around decreases drastically. Back to the banks, and they implement the same strategy. At a certain point, you'd be so interwoven into their ecosystem that even the thought of leaving sends shivers down your spine. The net result means that you pay more, and ultimately, the banks profit big time. So to know whether you'll be hit with hidden costs, answer these 3 questions. Have you had a credit card in the past? And if so, do you pay interest on the facility? Are you still with the same bank you were as a kid? Do you value convenience over price? If you answered yes to these 3 questions, then an offset account isn't for you. 3. Redraw versus offset. So let's touch on quickly what an offset account is and then look at its alternative. Offset account is an account which is linked to your home loan, and it allows for you to save money in this facility. An example is if you had $20,000 in your offset account and a home loan for $150,000, then you'd pay interest on the difference. In this case, $130,000. The alternative is called Redraw, and it does the exact same thing. That is to save interest on that $20,000, but it just does it in a different way. Redraw does this by taking that same money and transferring it into your home loan account. Looking at the same example, you transfer that $20,000 into the $150,000 home loan. It essentially reduces your balance to $130,000, but it will leave your home loan limit at still $150,000. So in short, offset and redraw does the same thing, which is to help you save interest on that $20,000. It's the same interest which is saved in both examples. It's just that they do it in 2 different ways. The beauty of redraw is that most banks now offer this with no fees and a low rate. And more often than not, they're more competitive compared to their package counterparts. So to know if redraw would work for you, ask these 3 questions. Do you access your savings regularly? Do you have multiple accounts where both your income and expenses hit sporadically? Do you have large amounts of funds available in a short period of time? If you've answered yes to these 3 questions, then maybe an offset account is for you. 4. When is redraw the best option? At the start of August, I caught up with a couple looking to buy their first home. Prior, they had met with their bank, who they'd been with since they were 7 years old, and they were simply looking for a second opinion. Their bank had recommended they get an offset account under their package, which meant they'd have to pay an annual fee of $395. The problem with this bank is that they hadn't taken any time to understand anything about this couple and simply offered a one-size-fits-all approach. You see, their goal was to pay off their home loan as quickly as possible, and they didn't want anything fancy. They didn't need the bells and whistles. Our analysis showed that they had the ability to pay off their mortgage within 17 years. And the main reason they were able to do this is that they were borrowing well and truly under their limit. Understanding this meant that they needed something with no fees and the ability to pay down as quickly as possible. It was because we took the time to find out about this couple's goals, we were able to make a recommendation which benefited them both now and in the future. In total, this not only saved the package fee, but we were able to get a lower interest rate, saving them close to $60,000 over the life of the loan. All this was achieved because we avoided the offset account and were able to get a home loan with a redraw instead. Now let's take a look at our calculator and see what's going to be best for you.
Okay, we're here with the offset calculator right in front of me. We've got that to our left, and we've got a bank, in this case St. George, just to use as an example to see, well, is it better to have an offset or a redraw for this particular scenario? So let's jump in, starting off with the loan amount. I'm just going to type in $600,000 here, and it's over 30 years. Now, with the St. George, let's have a look at the product that allows 100% offset, and that's their fully packaged product with an upfront fee of $0 and an ongoing of $395. We can see here they're charging 3.24% for this product. Awesome. Now moving over to their redraw home loan, the basic home loan, we can see with no ongoing fees, no upfront fees, and a low 2.59%. In this scenario, it turns out that redraw is the better option. We can see here the total cost over 30 years being $263,000 versus the offset of $350,000. So way better off if you go for the redraw. Now, if you're wanting a copy of this calculator, the link is in the description. Grab your copy and see what's best for you.
5. When an offset account works. Before we get into it, remember that this is general advice only and doesn't take into consideration your personal circumstance. It's recommended that you seek independent financial advice before implementing any of these strategies. Okay, so for those who are looking to make their home loan an investment down the track, you've all probably heard that you need to have an offset account. But my question is, does the cost of owning one outweigh its benefit? Let's benchmark a few things and then from there calculate which is the best accordingly. Based on the Australian Bureau of Statistics, in May 2020, the median Australian earnings were $57,000 per annum. And what I've done here is I've left out the average as it tends to skew the data due to the top 1 to 5% of income earners and therefore not really being an accurate representation of the typical Australian's earnings. So based on an income of $57,000, the total tax payable is about $7,127. Okay, now we've got the benchmarks. Let's take a look at why people recommend an offset account for investors. It's because each time you access these funds, you'll need to evidence that they were used for investment purposes. So if you were to spend it on, say, a holiday, well, then it means that the interest is no longer tax deductible for that component. Let's say we have a 3% interest rate and elect to go for a redraw facility. Suppose you redraw, say, $10,000 and spend it on non-tax deductible items. In short, it means you forgo the $300 in interest. That's $10,000 multiplied by 3%. Say we had opted for the offset account instead, but what does that actually mean in dollars and cents? Well, all that means is that with an offset account, you'd be able to claim the additional $300 being charged as tax deductible interest. And you'd be able to also claim the $395 package fee. As a result, it would reduce your tax deductible income from $57,000 down to $56,305. That's income minus a package fee and the interest which we now can claim. And what this essentially means is that it would reduce the amount of tax you pay, down from $7,127 to $6,899. That's a savings of $228 in tax based on having an offset facility. But factoring in the fee which you charge per annum would actually mean that you're $167 worse off each year. And in short, this scenario would mean that redraw would be the better option. At no point am I saying that I'm a tax expert. All I'm advocating for is that you question your tightly held assumptions about what an offset account is and whether it'll make sense financially for you. Too often do I hear people say that I need an offset account, but in actual fact, if you dig deep down, you might find that the numbers don't add up for you. If you're a first home buyer looking to convert your first home into an investment down the track, ask your accountant these 3 questions. How much tax would I specifically save if I had an offset account? Are there alternatives to protecting my tax-deductible debt? At what point does it make more sense for me to have a redraw over an offset account? A great accountant will be able to detail these specifically and which is better for you. Because in the end, if it's a marginal net gain to take an offset versus a redraw, personally, I'd prefer to take a home loan with no package fee. 6. My final thoughts. Make no mistake, the bank's only goal in life is to make as much money as they possibly can. It's the Royal Commission which uncovered their dirty little secrets for all of us to see. And with an offset account, it's no different. And that's everything for today. I'd love to know what you think in the comments below. Here at Hunter Galloway, we help people across Australia. So if you're looking to purchase or refinance, we'd love to help. Reach out and visit us online, huntergalloway.com.au. And remember, hit that subscribe button below. I'll see you next time.